January historically has been a weak month for us, and given the kind of returns that we have seen in November and December, do you expect some bit of a consolidation moving on for at least for the next couple of months?
No, I think you're right, Suresh, that there might be some consolidation in the month of January after a very strong month of December. But as I told you that if the government announces its electoral campaign after the 22nd of January, which I think in all probability most market men are expecting, because the sentiment is very strong, and I think they would like to announce elections as fast as possible. So if this news obviously comes to the market, I think the market would actually greet this quite strongly. In case of consolidation, I would say that this would also be an earnings month. We could see the third quarter numbers coming out. So I think you'll see a lot of stock specific activity rather than the broader index based activity. I think because you will get to hear a lot of managements, commentaries from the top management guys, and I think that will be obviously related on a stock to stock specific basis level. So I would say that yes, the index may remain in a range, but you'll see a lot of stock specific activity because earnings numbers could actually give you a better insight as to what is expected, in the next 12 months, because possibly after the December quarter, most companies would be even giving their guidance for FY25 and so on. So I think it would be more stock specific rather than index based.
Now, Mohit, as Mr. Gorakshakar also rightly pointed out, earnings season is pretty much upon us. What are your broader expectations from the December quarter? Something that was missing in the previous two quarters was that demand, at least at the bottom of the pyramid, was lacking. Can we see a turnaround from here on, considering that, December had the festive season and the wedding season?
Yes, I think Suyash, look, there are two things which everyone is kind of looking at, which is on rural demand, and which typically ties in with what you are saying, which is demand at the bottom of the pyramid. I think there has been a sluggish growth in the rural demand, but my sense is this quarter and the quarter coming, for two specific reasons. Once this has been a festive quarter through and through, and plus the great Indian wedding season was there with almost 38 lakh weddings happening in this season itself, right? So my sense is all this would have spurred on the demand, and we will get to see that in the numbers. My sense is it should start reflecting in the numbers, and plus the harvest also has been reasonable, the winter harvest. And second is the election campaign, which has been mentioned already in this show. I think with the election spending coming, it's always a boost to the rural demand. It's always a boost on the smaller towns and cities where a lot of this money gets spent in terms of promotions, in terms of publicity, in terms of freebies and other things. So my sense is that should give kick up to the rural demand, and which should again reflect in Q1 numbers. The Q1 calendar FY24 number, calendar 24 numbers, right? So both these factors put together, I think should give us positive surprise in the earnings.
All right. Now, Mr. Gorakshakar, with a view, towards 2024, what sectors do you think can outperform next year? This year was definitely the one for PSUs and realty stocks. What sectors can take the limelight in 2024?
Yeah, I think Swash, one needs to be a little contra when you talk about performance of sectors which have underperformed actually last year. We are positive on the agrochemical sector because we believe that last year the entire agrochemical sector underperformed because of high inventories in the system. But now, as of December, we have been talking to many agrochemical companies, and I think inventories in the system have more or less got completely neutralized. So the next year should be a very strong year for most of the larger agrochemical companies. We are positive on UPL, Sumitomo Corp, Rallied, which we believe are available at very attractive valuations as of now. And I think obviously in the tried and tested, sectors, we still continue to be positive on the commercial vehicle sector. We believe stocks like Tata Motors, Ashok Leyland, and obviously the ancillaries we supply to these companies are going to do extremely well because with the GDP growth of almost 6.5%, obviously economic growth is going to drive these companies. And of course, you can't ignore the railway and the defense, segments, which are tried and tested and again showing extremely strong demand. So I think these would be the sectors where the investor should keep a watch. Any decline in the market, any correction should be used as an opportunity to buy on declines.
All right. And Mohit, if you are to build a portfolio for the long term from scratch, and let's say you have rupees 10 lakh, what will be your strategy for 2024 and what will be on your shopping list?
Okay, so Suresh, look, honestly, I think I will tend more towards the large caps right now, the good big names in the market, though they haven't rallied much in last 2 to 3 years, honestly. And what we have seen in the market is a phenomenal mid and small cap kind of rally. If someone is asking me to make a portfolio, I'll actually allocate 60% of my funds towards the big heavyweight names in the Nifty basket itself, basically because those are all tried and tested names. The bigger banks like HDFC, ICICI, they haven't done much. The bigger and plus one contra call, which I have always been mentioning on this show for last 2 3 times, which is the IT pack. My sense is in second half of 2024, the IT pack should start picking up as the rate cycle starts reversing. With the yields easing off in US, already we are seeing some momentum in the IT pack. So heavyweight ITs and continued with the mid cap IT names should reasonably do well. Plus, I also concur with the view that some bit of steam is again left, though much of it has been taken off the table. But in the railway stocks and the defense stocks, where the smaller names are there in terms of ancillary and support services to these kind of things, I think that is one play which is still left in the market to some bit. And maybe first half of this year, we continue to see some momentum in the real estate sector, though it's a tricky sector to be in. But yes, I think the momentum is fairly strong out there.
And Mr. Gorakshakar, coming to you, what will be your, let's say, 2 to 3 top stock picks for 2024?
We consider real estate as a very strong opportunity. I think a company called Anant Raj from Gurgaon, we are very positive on this stock. Our sense is that the company has a very unique business model of data center and real estate. The data center business is one of the larger opportunities which we feel would play out over the next 12 to 18 months. So we have a target price of around 375 here. And on the large cap, I think we continue to be positive on the PSU banks, specifically Bank of Baroda and State Bank of India. SBI, we are looking target price of around 740, 750 over the next 12 to